Hi everyone, this is Gráinne Thornbury here, working with Seamus Kavanagh in the IIFA office, Irish International Freight Association. You're all very welcome here today for our webinar on customs, Module 8 of the IIFA Fiat Diploma course. This particular webinar we are concentrating on the calculations of duty and VAT for shipments being imported from third countries. A third country is any country that is not a member of the EU. In order to determine the correct rate of duty applicable to a given commodity, the correct tariff number has to be obtained. A tariff number is also referred to as the commodity code or nomenclature code. A 10-digit number is required for the import SAD. This 10-digit number is obtained from the TARIC. The TARIC is the integrated tariff of the European Union. It contains all measures applicable to tariff classification, duty rates, tariff preferences and quotas, and it also contains agricultural measures and prohibitions and restrictions. For more information on the TARIC, please refer to the Customs Manual section 8.3c for more in-depth knowledge. Now we're going to give a brief demonstration on how to use the TARIC to obtain the correct tariff number for a given commodity, in this particular case garden umbrellas, and then to find the correct rate of duty applicable on an import from a third country. So now we're going to have a look here at finding a tariff number for garden umbrellas. So we're in the TARIC consultation page here, and at the goods code we're going to click on Browse. Now this opens up for us here a section, and we see all the different sections to do with the customs. For example, section 1, live animals. Section 5, mineral products, section 10, pulp of wood, and we're interested in section 12. So I'm going to click on section 12 here, footwear, headgear, umbrellas, sun umbrellas. So we're interested in this section. So now we see we have opened up here a number of chapters. Chapter 64, footwear, gaiters and the like. Chapter 65, headgear and parts. Chapter 66, umbrellas, sun umbrellas. So we're interested in that, so we click on chapter 66. Now when we look at it, just bring this down here now. Within chapter 66, we can see a subheading, and there is 6601, umbrellas and sun umbrellas. So we're going to click on that, 6601. And when we look here, we see under 660110 garden or similar umbrellas. So we'll select this. And now we're back into the TARIC consultation page. And there's our tariff number. And if we click here now on Retrieve Measures, and under this section now we see 660110 garden or similar umbrellas, and we see under erga omnes, which means from all countries, third country duty is 4.70%. So if we look above here under the TARIC measure information, we see the goods nomenclature code 660110 0000, and this is the tariff number that we require. Now we're looking at example number 1. We have a shipment of 10 live horses for training. The value is €10,000 arriving by air from Montreal, Canada. Terms of sale, CIF Dublin Airport. That is cost, insurance and freight up to arrival Dublin Airport. Air freight charges of €6,000. Now this will be shown as a separate breakdown on the invoice, and it will be included in the €10,000. The tariff number as advised, and this is the full 10 digits, and also this has been obtained from the TARIC, and the rate of duty is 11.5%. So the calculation will be based on the CIF Dublin price, i.e. the cost of the goods, insurance on the goods and freight on the goods. This is the value that customs require to be declared on the SAD. However, the invoice price includes the air freight charge of €6,000, A reduction in the air freight charge is allowed. See air transport costs to be included in the customs value sheet. This sheet has been sent to you via email with the customs assignment. If you look at the sheet under Zone A, Canada, you will see Montreal is included in the list and that only 70% of the air freight costs have to be included in the calculation for the duty amount. The reason why there is a reduction in the air freight charge to be used for the duty calculation is that the EU does not feel entitled to charge duty on transport that is carried out within the customs union. So if we have a look here at the calculation, the air freight €6,000 multiplied by 70% equals €4,200. So we can deduct a CIF price for the calculation of duty as being €1,800 less than the invoice price of €10,000, which works out at being €8,200. So the CIF price to declare for calculating customs duty on the SAD is €8,200. And the rate of customs duty applicable is 11.5%. So we multiply €8,200 by 11.5%, and this gives us a duty amount of €943. Now, VAT is 4.8% on livestock. VAT is a national tax and is calculated on the full CIF price. There are no deductions for freight charges, but it's charged on the full freight cost to Ireland and even inland if applicable. So VAT is based on the cost of the goods plus duty. So therefore the calculation is the full CIF price of €10,000 plus customs duty €943, and this gives us a total of €10,943 multiplied by the VAT rate of 4.8%. So this gives us a VAT amount due of €525.26. So therefore, the total amount of duty and VAT payable on this shipment is €1,468.26. Example number 2. This time we have 100 cows from Brazil, purebred breeding animals. The tariff number as shown, the full 10 digits. Kilo and number are required for quantity, and the rate of duty is 0%. The value is €100,000 CIF Dublin, cost, insurance and freight. Now in this particular shipment it has arrived directly by sea to Dublin docks, so therefore we do not have to worry about reduced freight charges in the duty calculation. The rate of customs duty is 0%. VAT is 4.8% on livestock. So VAT is a national tax and is calculated on the full CIF price to the first port of call in Europe. In this case, Dublin is the first port of call. So VAT is based on the cost of the goods plus duty. Now in this case there is no duty, so the VAT is based on the total CIF value of 100,000 multiplied by the VAT rate of 4.8%. This gives us €4,800. Looking at example number 3, this time we have a 20-foot container with 10,000 units plastic crates coming from China. The tariff number as advised, showing the full 10 digits, and the rate of duty applicable is 6.5%. This has been obtained from the TARIC. Now the value of the shipment is €40,000 FOB Shanghai. This means free on board Shanghai. This container is shipped from Shanghai to Dublin via Rotterdam. The total freight charge from Shanghai to Dublin is €2,500, and there is an additional cost for insurance at €150. So the calculation will be based on the CIF Dublin price, cost of the goods, insurance on the goods and freight on the goods on arrival at the first port of call into the EU. By first port of call into the EU, we mean in this case Rotterdam. In other words, freight charges up to arrival Rotterdam are to be included in the calculation for duty. Rotterdam to Dublin freight charges are not to be included because the EU does not feel entitled to charge duty on transport within the customs union. In this case, the shipment arrives first at Rotterdam. So therefore we can calculate the freight charge based on the cost to Rotterdam. This is for the calculation of duty, and ignore the Rotterdam-Dublin cost in that calculation. Ideally, the breakdown of the sea freight charge, Shanghai to Rotterdam, and then Rotterdam to Dublin would be noted on the shipper's invoice. However, if that is not the case, a calculation may still be made of that breakdown, but bear in mind that these figures may need to be supported by evidence in a subsequent audit by Revenue. So in this case, we estimate that the sea freight cost from Shanghai to Rotterdam is €2,000 and from Rotterdam to Dublin €500. The rate of customs duty is 6.5%. So the calculation is the FOB price €40,000 plus insurance €150 plus sea freight to Rotterdam €2,000, and that gives us a total of €42,150. This is the value to use to calculate the duty. The reason why customs only want to include the freight amount for duty purposes up to the first point of arrival into the EU is that the EU does not feel entitled to charge customs duty on transport that is carried out within the customs union. So the CIF price we are declaring to Revenue is therefore €42,150 multiplied by the duty rate of 6.5%. This gives us a duty amount of €2,739.75. Now VAT is charged at 23%. It is a national tax and is based on the total freight charge to Dublin. VAT is based on the cost of the goods plus the duty amount. So it would be as follows. The value, the FOB Shanghai, €40,000. Insurance cost, €150. Total freight Shanghai to Dublin, €2,500. The duty amount is €2,739.75. That gives us a total for VAT purposes of €45,389.75. We multiply that figure by 23%, and that gives us a total VAT payable figure of €10,439.64. So therefore, the total payable to Revenue is, we add the duty amount and the VAT amount together, and this gives us a total of €13,179.39. Example number 4. 40 boxes of plastic caps for bottles, 10-digit tariff number as advised, and the rate of duty applicable is 6.5%. This is a consignment being shipped by sea from China, and the value is €8,000. Now, this is being shipped in one container from China to Dublin via Rotterdam. Now, in this particular case, the supplier's invoice does not show a breakdown or a split of the transportation charges from China to Rotterdam and then from Rotterdam to Dublin. Normally, when a split is provided, clearly showing the EU charge and the non-EU charge, the EU charge is subtracted from the total figure, as we only want to base the calculation for duty on the transportation charges up to the first port of arrival into the EU. So what we have to do here is use the full CIF Dublin value in our calculation for duty. Please refer to pages 74 and 75 in the Customs Manual for more information on a customs valuation for sea freight import shipments. So looking at our calculation, it's based on the full CIF Dublin value, which is €8,000, multiplied by the rate of duty, which is 6.5%. This yields a duty amount of €520. Now the next step is to look at the VAT calculation. So this is based on the full CIF value of the goods, which is €8,000, plus the duty amount, which is €520, and this gives a total of €8,520 multiplied by the rate of VAT, which is 23%, and this yields a VAT amount of €1,959.60 payable to Revenue. So add the duty and the VAT together, and the total payable to Revenue is £2,479.60. Please refer back to example number 3 again, as in that particular case, the split of EU and non-EU transportation charges have been provided, and compare how the duty and VAT was calculated on both of these examples. Looking now at example number 5, we have a shipment of 5,000 commercial catalogues, tariff number as shown, showing the full 10 digits. The unit of quantity is in kilo and the duty rate is 0. The value is €10,000 CIF Dublin cost insurance freight up to arrival Dublin. This is from New York to Dublin via Rotterdam. The sea freight costs from New York to Rotterdam are €1,000 and Rotterdam to Dublin €200. Now in this case, in view of the fact that there is no duty involved and the fact that Rotterdam is the first port of call into the EU, this need not be considered and the calculation would be therefore only concerning the VAT. So in this case, it is the full CIF Dublin price, €10,000 multiplied by the VAT rate of 23%, and this gives us a total VAT payable to revenue of €2,300. Now we're looking at example number 6. We have a shipment of waterproof footwear with metal toe cap, 300 pairs, and it's an import from Vancouver in Canada. The tariff number as advised, showing the full 10 digits, and the duty rate applicable is 17%, and this has been obtained from the TARIC. Now the value on the shipment is €9,000 by air from Vancouver, Canada to Dublin. Terms of sale, FCA Vancouver Airport. Free carrier arrival up to Vancouver Airport. Now the air freight charge is €500 and an additional insurance cost of €100. If you have a look at the sheet regarding air transport costs to be included in the customs value, this sheet has already been emailed to you with the customs assignment. Look at Zone B and we will see that 78% is the percentage amount of the air freight cost that has to be included in the duty calculation. So looking at the duty calculation, it is the cost of the goods €9,000 plus insurance €100 plus the freight amount of €390. This is 78% of the full amount of €500, and this gives us €9,490 multiplied by the duty rate of 17% and gives us a total duty amount payable of €1,613.30. Now if we look at the VAT calculation, this is based on the full CIF Dublin value plus duty, and so the calculation would be the goods €9,000 plus insurance €100 plus the full air freight amount of €500 plus the duty amount of €1,613.30, and this gives us a total figure of €11,213.30 multiplied by the VAT rate of 23%, and this gives us a VAT amount of €2,579.06. So add the two figures together, duty and VAT, and this gives us a total of €4,192.36 payable to revenue. Looking at example number 7, we have a shipment consisting of 50 heat exchange units for use in buildings from Montreal, Canada. The tariff number as advised, showing the full 10 digits, and the rate of duty applicable is 1.7%. This is on the basis of CIF Dublin €5,000 via air freight, and there's an air freight charge of €600 included in that figure. So once again, if you look at the sheet regarding the air transport costs to be included in the customs value, look at Zone A and you will see that 70% of the air transport cost has to be included for the duty calculation. So the calculation for customs duty is the goods value of €5,000 less the reduced air freight charge. So the full air freight cost is €600 multiplied by 70%, and this gives us €420. So we now deduct €180 from €5,000, and this gives us a CIF value of €4,820. So to work out the duty, we multiply €4,820 by 1.7%, and this gives us a duty amount of €81.94. Now we'll have a look at the VAT, and VAT is a national tax and is calculated on the full CIF value to Dublin, including the full air freight charge. So it is €5,000 plus the customs duty of €81.94, and this gives us a figure of €5,081.94 multiplied by the VAT rate of 23%, and this gives us a VAT amount payable to revenue of €1,168.85. Well, that concludes our webinar, and thank you all for your attention. Please remember you can view this webinar as often as you wish, and the slides can be printed off the Moodle website. For those of you who would like a bit more practice on finding a specific tariff number for a specific commodity, you could have a go at checking the tariff numbers for these 7 previous examples in the TARIC. Also, an additional clarifying note has been sent out to you via email. If you require any further assistance, please contact myself, Gráinne, at the IIFA office.